You're not going to want to miss this. Top 5 gems. Let's go. What's up, everybody? Welcome back into the RonnieV show. Today, we're going to be talking about my personal top 5 gems for the next 3, 5, 10 years. What is a gem, Ronnie? Well, a gem is a sub $10 billion market cap company that has massive 5 to 10x or more potential over the next 2, 5, 10 years. Really keeping it more around 5x potential in the next 2 to 5 years. Now, a sub $10 billion market cap is a company typically that's just, it's not too small. It's not a micro cap. It's not too big. It's not a mega cap. It's just kind of in that mid cap range, sub 10 billion, where they're really catching their footing. They're more so a small cap than a mid cap, I would say. And really, what we're doing here is we're looking to find the next Palantirs, NVIDIAs, so on and so forth, right? We want to be early to the party instead of late to the party. And there's been so many great companies over the years, over decades, that have been such great companies to get into when they were basically sub $10 billion market caps. So today we're going to go over my top 5 gems, like I said. Now we're going to be going over my snapshots, which is one page, all you need, which kind of gives you like a snapshot of the entire company and why I'm bullish on it. And then we're also at the end of the video going to be getting into some charts, some monthly charts, and looking at my high five algo suite to see where we're kind of on track for and where these potentially could go over the next months, years, decades. Who knows, right? So let's get into it, guys. So here we have my whole catalog of high five snapshots. We're going to be sticking to these 5 right here. And just so I don't hold you guys hostage during the entire video, but I would hope that you would want to watch this entire video to understand why I'm so bullish on these 5 companies. But I will give you them up front. All I ask is you like the video, subscribe if you want to see more content like this, and that's all I'll ask of you guys. So Oscar is number 1, Zeta is number 2, D Local is number 3, Onto Innovation is number 4, and finally wrapping up we have Root. Now let's get into why these are my top 5 gems. And just to let you know, I have about 15-ish gems right now that I'm invested in the High Five Collective. So going back here to Oscar, we can see that Oscar Health's cloud-based Oscar Plus platform enhances member experience by offering healthcare providers engagement tools and analytics, while the campaign builder improves care management interactions. Basically, what you really need to know about Oscar is they are going to disrupt the health insurance industry. Oscar is built on Amazon Web Services, while all the others like UNH, Aetna Group, owned by CVS, CNC, Centene Group, all these companies are on basically broadband. Okay. And Oscar over here is being built on Amazon Web Services. They are integrated with AI. They have open AI partnership. They are putting it all together, right? When it comes to health insurance, and they're giving you the care that you need. And by using AI and by driving down those costs that they have, they're boosting up those margins. And the most bullish thing about this company, honestly, besides innovation, besides them going to disrupt the health insurance industry, which is a dinosaur legacy industry, is their CEO, Mark Bertolini. Mark Bertolini, I've said this countless times, used to be the co-CEO at Bridgewater next to Ray Dalio. So he has the stock market knowledge. And he was the CEO of Aetna Group, which was bought out by CVS. Now, I've went over this in countless videos, guys. If you want to understand more about why I'm so bullish on Oscar, I'll link some videos down in this description below, so you can go check those out, or I'll put them up here. I'll put a card up here at this time in the video if you want to go check those out. Come back after you finish this video. But honestly, one of the biggest reasons that I'm invested in this company is because of Mark Bertolini. I think he's a phenomenal leader, and I think he's going to take Oscar to new heights. And again, this is probably a 5, or after the big 12% move on Friday, which was amazing, probably about a $5 or $6 billion market cap still. And just to give you kind of a comparison, United Health Group is a 200 and some billion-dollar market cap, guys. So, yeah, there's plenty of room to grow in this field and in this sector. But let's talk about the financials here for Oscar Health. So, last year in 2024, they had a positive. Well, we don't want red. We want to erase that. Let's go with blue. How about blue? Oh, you guys are seeing me struggle here. Oh my goodness. Okay, I guess we're going with red, guys. Canva. What the heck, man? Are you guys seeing this? Okay, guess we're going with red. Sorry about that. So, uh, Oscar was a positive company for 2024, and then 2025 this year they're going to see a negative year, right? I can't do this big marker, guys. Oh my goodness. Oh my goodness. This is a struggle. This is a struggle to click this eraser. Okay, I'm done with the drawing. We got a little highlighter here. Oh my goodness, that was a whole thing. All right. So they had positive EPS last year. They're slotted for negative $1.38 of EPS for this year, and they're expected to do 93 cents of EPS. It was a big old thing, right? But really, what it came down to is medical loss ratios were higher than expected across the board, not just for Oscar, but for the entire industry. Basically, what that means is that it's costing medical bills and medical care are way more expensive than were thought to be, going into this year. So that means that the premium that you pay as a user compared to the what the actual cost of things are on the medical side of things, where basically the medical costs went way up and your premium stayed the same. So insurance companies had to pay way more over here, and it causes some issues, right? Especially for a smaller company like Oscar, it causes them to lose money in the year on earnings per share instead of be up 90 some cents. But those are expected to revert back to the mean of like 80% or lower next year. But they are, basically charging this year's medical loss ratios for next year. So we could see a massive explosion of EPS, more than 50 cents, honestly. I think we could see, a dollar plus in EPS next year, especially if ACA subsidies get extended. That's another big thing. If ACA subsidies get extended, that could be very huge for this company. Not just for EPS, but also for this for their revenue. Their revenues exposed after being 30 to 32% gain this year. Their revenue is actually supposed to decrease next year to about 11.18 billion. Now, again, if we get ACA subsidies extension, again, if you don't know what I'm talking about, go watch some of my other videos about all that. It's the Affordable Care Act, if you didn't know, but they're expected to see a rise if that's the case in ACA subsidies, probably 12 billion to 14 to 16 to 18 to 20. So you just shift all these numbers to the left, and that's what we'll be seeing. And we'll see our free cash flow continue to rise higher and higher and higher. Probably seeing a billion back to $1 billion in free cash flow next year if we do get ACA subsidies. If not, it'll just take a little bit longer. And the next 3 to 5 years look very promising for this company. Again, doing $12.5 billion in free in revenue right now, or 12 billion and 500 million in free cash flow, and this company is only a $5 billion market cap. Massive. Valuation's a 9, super undervalued. We have an intrinsic value of $46 based on a discounted cash flow model. You're getting a 53% margin of safety here today. $23 EPS fair value. You're only getting a 3%, which if you would have been following me back then, we were talking about this company whenever it was a 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, and then all the way back down to $12 stock, then all the way back up to $21 now. So you could have made your money, twice over, honestly. So why maybe hit that subscribe button and like button, guys. And yeah, health is a 5, growth is an 8. Like I said, they're doing 30% revenue this year. Value is a 9. Technicals are actually better than a 3 now. I put technicals at like a 5 or 6. and the moat is going to be a one. They don't have a moat. This isn't UNH. They're not the dominant player here, but I think they could grow into being the dominant player. I think I'm just going to go through all these snapshots and then we will go through the charts at the end. Number two, guys, Zeta Global. Cool thing about this name is I actually got invited out by David Steinberg, the CEO, and his team, along with Nick, who is Knots, who we do Retail Weekly every Friday for the most part. We both got invited out to Zeta Global Live. Actually, this coming Thursday, we're going to be out there. I'm going to be making a ton of content and seeing what Zeta Global has in store for the future. I'm really excited. This is a marketing company that uses AI powered cloud platform. It's Zeta marketing platform uses machine learning and large data sets. This helps predict what consumers like and improves marketing on different channels such as email and social media. This is a great company. They work with some of the biggest companies in the world, Amazon, and Meta, all these other companies, right? And they are a martech company, and they are using AI to drive down costs while driving up revenue. They just made an acquisition of Marigold, which was huge for them, and it's going to boost revenues massively in 2028. You have an intrinsic value of $20 per share on this company. Again, 31% margin of safety, which is really, really good. $27 EPS fair value of $27 and then 29% margin of safety there. Really, really good. But again, another one of those that if you were following me when we were calling this name out, sub $15 per share, which we're sitting at about, $19, $20 per share, there was much more money to be made. But still in the long term, I still think is that as a 10x, even from today's price. Just going to be, take a little longer. 69 cents of EPS going all the way up to $1.49 in EPS by 2030. And then 2025, $1.26 billion in revenue, $200 million in free cash flow, climbing all the way up to $2.84 billion in revenue and almost $500 million in free cash flow. And again, like I said, we will be at Zeta Global Live this coming Thursday. So definitely be on the lookout for some content there. Another reason to subscribe to the channel, hit the like button and turn on those notifications so you don't miss those videos and shorts that are going to be coming out while at Zeta Global Live. The two keynote speakers are going to be Tom Brady and Serena Williams. I am stoked. And again, I get to go for free because I've been covering Zeta, been talking about the bull case here since I don't know earlier in the year, and yeah, I guess it's gonna be my first time ever getting invited out to a company's um, big meeting or anything like that, conference, and I'm really, really excited. This name's also, just to put things in perspective, $5 billion market cap, and they're trying to basically go after CRM, Salesforce, which is a 200 and some billion-dollar market cap after a 40% move down from all-time highs. So yeah, definitely a great gem here and a lot of room to play. Number three, guys, D Local. They are basically your emerging markets, Goliath. They are a smaller company. Again, these guys are sub $5 billion market cap, a super small company, but they are very large in what they do with emerging markets and basically having constant transactions between different countries, doing the changeover of the monetary value, the currencies, etc. DLocal connects global merchants to emerging market consumers by enabling local payment acceptance and payouts through a single API. It simplifies cross border transactions in regions like Latin America, Africa, and Asia, unlocking growth in underbanked economies. So, like I said, they are a global company. They're not an American born company, but I just really like what they're doing, and they're getting a bunch of great partnerships. They just partnered with Google recently. I mean, this company is severely undervalued and doing a lot of things right, guys. $25 discounted cash flow, intrinsic value, 43% margin of safety based on DCF, EPS fair value of $18, margin of safety of $24 per share. Growth, value, technicals all look great. The moat's great. The health is great of the balance sheet and everything. And obviously, it's the same thing for Zeta as well. I forgot to go over that. $950 million in revenue, 2025, looking to expand up to $2.45 billion by 2030, 95 cents to $2.45 to 2030, and about $200 million in free cash flow. Looking to get up to almost $500 million in free cash flow. There's another one that I really, really like. And like I said, guys, stay tuned to the end. I'm going to be going over my high five algo suite, and I'm going to be showing you where I'll be buying or where I have been buying all five of these companies and where I see them going based on a monthly chart. Number four, guys. Number four, Onto Innovation is a U.S. company that provides process control and inspection equipment for the semiconductor industry. Yes, they're going. They're going to be a big picks and shovel play for the AI era. Its technologies help chip makers improve yields, efficiency, and quality across advanced packaging and lithography processes. The company serves leading semiconductor manufacturers worldwide, supporting both front end and back end production. This company is, again, a sub $10 billion market cap, and they're going up against companies like ASML, AMAT, and LRCH, Lam Research. So those companies are all, 50, 100, 200, $300 billion market caps or more. And, this is a little guy. I think they're sitting around $5 billion market cap. And you can see they look really good. I really like the EPS here and the revenue story. $6.30 of EPS pegged for 2025, moving up to $11.81 for 2030. $1 billion in revenue, finally cracking that $1 billion mark in revenue this year, moving up to $2 billion in 2030. 1.2 or 250 million in free cash flow, getting all the way up to almost 600 million by 2030 in free cash flow. 193, 189 DCF, EPS, fair value, intrinsic values, 25 and 24%. The thing you guys need to know about this name as well, it has ran a lot. We were buying basically in the 80s, and now we're sitting at about 130s, 140s. So we've ran a lot. This name was down like 40, 50% margin of safety. We are scooping up shares left and right down there. And now we're just kind of sitting back, relaxing. 25%, 24% margin of safeties are still really, really good area to be picking up this stock. It's just you're not getting as good as a deal as we were back in, the last few months. So last one, guys, number five before we get into the charts. Root Insurance Company. Everybody talks about Lemonade. I like Lemonade, but Root has the fundamentals, and they are really going after disrupting the car insurance market. Look, I'm not trying to be I'm not trying to be in the entire insurance market, guys. But right now, there's a lot of insurance names, UNH, Oscar, Root, that are just presenting, really, really great buying opportunities. And as a value investor, I'm going to buy companies when, prices are extremely depressed, and I think I can get a great deal on them. So Root is a US based insurtech company that uses mobile technology and data analytics to offer personalized auto insurance. Its platform leverages telematics and machine learning to assess driver behavior and set pricing more accurately. The company aims to disrupt the traditional insurance market with a fully digital, customer centric approach. Look, I've done a decent amount of research on this company and what they're doing with car insurance. Just me as a user of car insurance, like we all are, man. For me to be able to pay what I rightfully should be paying my insurance company instead of just paying a set like 100, I think I pay like $180 a month right now for me and my wife's car. Haven't been in an accident in a very long time. Haven't been like, I'm talking like 5, 10 years. Haven't had a speeding ticket in probably like 5, 6 years. My wife had one like a couple years, like 2 years ago, but and yeah, I don't know why we're paying so much, honestly. I guess $180 isn't that bad, but I mean, what would Root give me? Maybe I should look into switching over to Root myself, guys, as a investor in this company. But yeah, fair value and discounted cash flow, intrinsic value, $156, $144. You're getting 40 to 44% margin of safety. Phenomenal. $1.98 of EPS this year, going all the way up to $5.88 projected by 2030. 1.4 billion moving up to over 2 billion in 2030. These are conservative assumptions, guys. I think they can grow a lot faster than that. You're talking about $120 million in free cash flow, moving all the way up to $220 million in free cash flow. And again, I think they could probably, if they really hit the nail on the head, I think they could probably be looking at 20-30% revenue growth for the foreseeable future, at least 5-10 years. So looks really good. I really like Root for the future, and I'm definitely going to continue to buy this one. And how I'm going to be buying is going to be based on my charts over here that we can now move over into. And if you haven't yet, again, if you like this type of content, guys, all I ask of you, hit the subscribe button. It's free. Hit the like button. Give that little party emoji and get that thumbs up going. So first up, Oscar Health. This was our number one gem. This one has been in this consolidation period for 2 whole years. 2 whole years of consolidation. And with the high five algo suite, which is basically all this, right? This, and this. This is our high five algo suite. Okay. This is your flow. This is your algo. And this red and green line is your pulse. So your pulse is kind of what tells us how to stay in, how long to stay in, when to get out. Your algo gives us entries and exits. And then your flow just kind of gives us the flow of things, right? So bullish, bearish, getting back to bullish here, right? So how do we read this? Well, we can see that we first got a launch alert, which is our buy alert on the algo at $6.79, which were $21 today. That was back in November 2023. We got another launch alert here at $13 or $14.51. And we just last month in September, we got another launch alert at $17.88. This algo has been 100%. You can see it right here, 100% profitability rating since 2021. You can see we entered here, we exited here, we entered here, we exited here, we entered here, and who knows where we go from here. Honestly, probably much, much higher. So we're batting 1,000% right now, which is amazing. And we are getting this launch alert, which we got it last time. We could not break through this $22 to $24 range. I think we finally break through this range, guys. I think we finally break through this range, and then look out. I think we are going to minimally hit all-time highs up here at about $37. And like I said, this company's fair value, excuse me, this company's fair value, if we go back to here, it's $46 per share. So $46 per share is the fair value on Oscar. So we're looking at a move from today's price, even though we ran a lot, $46. We're looking at a 113% move from today's current price. Absolutely phenomenal. And like I said, we've been buying this name at 11, 12, 13, 14, 15, 16, 17. I've been screaming from the rooftops. Anything under $20 per share, we've been buying, right? And you see at the end of the day, from $11 or $12, you're looking at 200 to 300% already. So you're already getting a 2 to 3x on this name, which is just phenomenal. We got the buy alert. The flow is curling up and going. The high five algo is going, and honestly, you can see it right here. If you would have bought in November 2023, you would have been riding this pulse, and you would have never exited. You would have never exited this name, and you'd be up, 6, 12, 18, 20. Yeah, you'd be up like 4, 5, 6x right now, from 6 all the way up to 21, guys. And we're still running, right? We haven't got this red yet. We haven't got any red on the pulse yet since we entered back here or here or here. So you'd still be riding this thing higher, and I've nothing to worry about. And again, this is a monthly chart, so it's going to take, each candle is a month. It's going to take a while for this to play out. But I think when we break over this about $24 range, you are going to see a massive, massive move. And it probably comes with ACA subsidies getting extended. Number 2 is Zeta. You see last time, launch on the algo here, and then we stayed here until we got an exit all the way up here, right? The high five flow went running, and the pulse went running, and then the pulse eventually told you to exit, and so did the algo. The algo told you to exit before the pulse. And you can see we ran from $8.47 all the way up to a high of about almost $26. Massive move. And now again, you're getting this launch signal back here at $17.59. You're only at $19.33. So you still have plenty of room on this thing. Getting this buy alert, climbing higher on the algo. And then you had this bearishness come here, and now you're curling up. You're about to cross the zero line, and Zeta is about to go flying here as well, just like it did last time. It's honestly just repeating this whole move. And I think we go flying 30 plus definitely. And then I think we could possibly get to all time highs and get over $40 per share in a reasonable amount of time, probably 40 plus within the next 2 or 3 years, I would say, is what I'm looking at. But long term, I think again, this company can 10x, and we were talking about a $200 market or $200 per share at that time, or a $50 billion market cap, or $46 billion market cap for a 10x from today's price. Delo, another one. You had this big move up here back in 2021, about $73.67. You had this fall from grace. You had this bottoming out period. They've been consolidating down here, and now they're finally coming out of the gulag. We had this launch here at $10.04, and then we had an exit actually at $9.07. So we would have lost on this trade, but we're back at it again. We got a launch here. Like I said, the algo is not perfect, guys. We're not always going to have a 100% win rate. I'd be selling you snake oil if I was saying we only have a 100% win rate on everything, guys. But still, had a nice run up. If you would have trimmed up here, you would have been fine on some gains. But at the end of the day, you bought here, you bought here. This pulse never flipped to red. It never told you to exit. So you're still in this name since $10, and then here since $10.25. You would have bought either one of these, and then now you're up at $14, and it hit a recent high of $16.44 after some amazing, amazing earnings. So again, on the monthly, I simply buy, and then it starts running up, and then I skim back my DCing and buys, and then maybe I just don't even buy anymore, and then I just ride the wave. But guys, you have what I believe, you had this spike here, and then you had this spike, and I think we're just going to climb now, and I think now is the time that you break over this, then you break over right here at 24, and then 34. Yeah, I think the sky's the limit for this company. We're literally talking about a $14 stock that's in this consolidation period that has been in here for 2 years, almost 3 years now. And I think you're going to get this massive run from 14 to 30 to 40 to 50 to 60, guys. So yeah, I really like D-Local. I really like the chart. Our algo's telling us it's a buy, and that's really all about it. On to innovations, another one that we got the launch here, been riding it. You had the eject here, would have made a big fat gain if you would have, traded this. You had the launch here, you had the eject all the way up here. That's massive, guys. So basically, let's just say you were buying back here at $38.57, and then you would have exited at $88, and then you bought again at $75, and then you would have exited at $206. So that's some pretty massive gains. Strategy back test, we have a 51% profitability rating on this name on a monthly chart. And it's clear as day probably why, because you're getting all these. You were in this massive consolidation for all these years, kind of not really going anywhere. If we zoomed in on this, obviously we bought here at 1490, and then you would have sold at 2631. So it just looks all smushed because because you're just zoomed in, but still a lot of wins in there. But we look at our flow as well when we're looking at all these things, and how what I consider an A plus setup is this right here. An A plus setup is whenever we flip to green right here on the pulse, we get a buy alert on the algo, which is that little circle up there. And then we are down here. Bears took over, and now the bulls are fighting back. And as the bulls fight back, we get a bullish cross, which will get us a green triangle. And then once we get through the zero line, we'll get a teal square. And green triangle is bullish. Teal square is ultra bullish. And we will see this massive swing up back to all-time highs and break through all-time highs at 250. and then move up to 300 and so on and so forth as long as they keep executing the business. But that's what I think is a basically a plus setup. And yeah, it's what I really look for with these companies. For instance, let's just say, back here, we were getting these buys in here, but we really didn't. We were just kind of like in this consolidation period here too. You had this spike, but besides that, you're just kind of hugging the zero line. When you're just hugging the zero line, you're not going to get a lot of moves up or down. Now, if you go over here, you can see that you had this big swing up. That was bullish. You made a lot of money. Big swing down, could have shorted, and then another big swing up, and then big swing down. You guys see the point, right? So that's why the high five flow is so good as well, because it helps you avoid like this choppiness in here. And that's what I teach in the high five collective. If you're interested in joining the high five collective, that'll be linked in my bio below as well. Right now, we have about 200 members. We have an investing Discord and WAP, and we have a separate trading Discord and WAP. Two different things. One's all about long-term investing with monthly charts, the algo, and my snapshots that I showed you. The other one's all about my trade alerts and trading with the algo on smaller time frames. And you can actually get access to this high five algo if you join the platinum tier, or you can get the standalone product, just the high five algo suite on my WAP app as well. Like I said, those will all be linked down below. This thing is massive and it's going to make a lot of people a ton of money. It's my old and new strategies combined together, and the win rates are just pretty shocking. Pretty shocking. Like I've already showed you 100% on Oscar, what 100% on Zeta, D local is 0%, so that's not great. But again, it's only had one trade that I showed you that didn't work out, and now we're in the second trade. And honestly, if you just trimmed either one of these, it would have worked out. Onto's a 51% win rate, and then Root is an 80% win rate over 5 trades since 2020. So pretty solid stuff, guys. And this doesn't take in consideration the pulse or the high five flow. It's only taking in the algo. So the high five pulse and flow definitely increase your win rate and your probability of winning. Also, by just knowing, right, what the overall market's doing. So this is another really good thing is this. We're able to tell what the market's doing, right? So if we're down on the flow and we have a sell signal and we stay in a sell signal here, right? We stay in a sell signal on the algo here, and we're going down and down and down. I'm not going to be longing stocks here when the market's going down and down and down. See, like you can't code those things into um, the algo suite, guys. It's just something that we teach in the High Five Collective. Is hey, when we're going down like this, and this is clearly we're in a bear market, you don't be going long stocks, right? When you're trading, of course. Um, and then what I teach is we wait for these launches. We find really undervalued companies on the high five snapshots, and then we wait for these launches on the monthly, and then we get in. That's when we get in big, and we might miss out on a few percentages, but we're not catching a falling knife here. So that's what I really like about it. But yeah, since 2023, we've been in a massive bull market. We've been riding this high five pulse, and we haven't broken it yet, like we did back here in 2023. So until this flips red and we break it, then we're just going to keep going higher and higher and higher, guys. So yeah, market's looking really good. But last one, number 5, before we close out this video, Root. If you would have been buying off the launch down here in 2023, February in 2023, and then April in 2023, you would have been riding this pulse higher and higher and higher and higher and higher, and you would have just sold out. So you would have been buying in at 586 and 425, and then you would have just sold out based on the pulse at $105. Yeah, already 10x your money using the algo. And I can tell you, I'm not charging $10,000. I'm not charging $5,000. I'm not even charging 3,000. The algo's 150 a month, 1,500 a year for the platinum, and then just for the platinum gets you the entire trading community. And then we have $49 a month, which is the investing community where I post the monthly charts for any stocks that we're in, any gems that we're in. So that's only 49 a month. And then you can buy the algo alone for $99 a month or $1,000 a year. That's it. And everybody, I did 10 lifetime. I did 10 lifetime memberships, right? I did 10 lifetime memberships when I first launched the algo a couple weeks ago. Sold all 10 to the collective members already. They're in for lifetime now, and some of them made all their money back in one single day. One single day, they made all their money back. So now they have lifetime of the algo, lifetime of the trading community, and they already made all their money back. So absolutely crazy. So root here, honestly, guys, I'm waiting, right, until we get a buy alert. When we get a launch, I will get back into this name. So I'm waiting for this to curl back up, to get this launch, and then for this to happen on the flow, and then obviously for us to flip back to green on the pulse. And then I will be going heavy, 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 heavy into this name because, like we already saw, this is a 80% win rate on 5 trades. You would have won big there. Even buying here, you would have won big, right? So, yeah, I'm just waiting for this thing to flip back, give me a buy alert, and I will be going very, very heavy into this high 5 gem. So that's it, guys. If you enjoyed this video, if you want to see more videos like this, you enjoy my content, give me a follow on X. I post on there all the time. I have almost 30,000 followers. Maybe you'll be the 30,000 person to follow me over there. If you want to join the High Five Collective, the link will be down in the bio below. And if you want to see more of my content here, subscribe. Do me a favor, hit that like button. I appreciate you guys. I hope you have a fantastic day, and I'll catch you guys in the next one.